Hey, rich friends, it's your girl Cha reporting live from the Money Mantra, and we're back with another Forex education video. The purpose of this channel is to help as many people as possible become independent and profitable traders. So, if that's something that you are interested in, please make sure that you do subscribe to this channel. If you get to the end of this video and you find that it's helpful, leave me a comment to let me know what you learned, and share this video with another trader. If you need more hands-on assistance and the videos just aren't enough, you can register for personal mentorship or follow me on Tradingview, and that information is down below in the description box. So in today's quick video, we are going to be going over how to backtest. Backtest is exactly what it sounds like. You are looking back into the past to see why something happened. And Tradingview has a lot of really great features that make it perfect for you to be able to backtest without getting confused or getting lost, and to actually see things play out in real time. Again, I do have a playlist on my channel, which I will tag here in this video, called Real Forex Wins and Losses, where I do backtest all of my basically wins and losses. So I'm going to show you guys how to backtest your strategy, and then you can just apply that to analyzing your trades after they have happened. So the first thing that you're going to want to do is go to tradingview.com. This is the website that we're going to be using to trade on. Now, this is not the only trading analysis website, but it's just the one that I engage with the most. This is where I post all my content, and this is where I have personally found a lot of success. And I like to say, if something isn't broke, don't fix it. So when you go to TradingView's homepage, it will look something like this, or it may be white. Don't worry if it's light or dark. I just have a dark theme on mine because I'm trading at all times of the day, and sometimes I don't really want my screen to be too bright at night. On the right side of my screen, I can access everything from my home screen just because I've customized it that way. And again, I do have another video how to customize your trading view just to fit more in with your trading style and habit. So I have my watch list here on the right side. And the watch list pretty much is just all of the currency pairs that you tend to look at or analyze. So you guys know, for the most part, I tend to focus on USD pairs, so I have them at the top. And then I do look at other stuff occasionally, like maybe Euro GBP or JPY, if my USD pairs just aren't really moving like that. And I can organize these. If I want to put Euro USD second, I can organize these in whatever order I like. But I just keep it in the order of what I typically look at trade. So if it'll be helpful for you, you can just set up your watch list so that you don't have to consistently be looking for stuff. It's just always going to be there. So to do that, you just click this plus sign and you add whatever you wanted. Like, let's just say I wanted to add CADJPY. I would just search it and then click the plus sign, and then we'll see that it's been added to my watch list on the side. So that's just a little tip, because you can customize this a million ways, just like you can customize your phone or anything. So I'm going to click C on super charts because that's how I actually bring up my chart, and we're going to get into the back testing aspect of it. So first and foremost, once you make these changes, it's like you don't really have to do it often, but as you guys can see, I have my watermark on here. So it says Euro USD 5 minutes. If I change it to 4 hours, it's going to say Euro USD 4 hours. And I just like to do that so that I'm never really confused at what I'm looking at. Because when there's no watermark, you may think you're looking at something and get into a trade on another pair, because I've definitely done that before. So I just try to limit the mistakes that I'm making. And that's essentially what backtesting is all about. Like, you're studying what's going on and you're making it easier for yourself. So you're taking all these notes, you're making all these mental notes, you're just trying to figure out what's going on. So if you want your watermark to be on your screen so that even if I switch pairs, it's always the correct pair, and especially because I'm posting trade ideas and content for other people, I just want it to be very clear. So this is also going to be helpful to you guys if and when you do start posting on TradingView, just so it just looks better and it's easier. And the way that you add this is you click the settings gear, which you can find at the top of your screen or the bottom of your screen. It's a bunch of different tabs over here, but you want to click the canvas tab and you want to turn the watermark on. Like, you can see if I turn it off, it's no longer there, but you want to have that box clicked. And then you can change the color to whatever color you want. Purple is my favorite color, but if I wanted it to be pink, it could be pink. It could be blue. It could be red, orange, whatever you want it to be. So we're just going to go back to purple and click. Okay. So there it is, our watermark. Now, when it comes to back testing, something that you may want to invest in is the lowest tier of the lowest paid tier for TradingView, which is called the Essential package. I don't get anything if you guys join this, but I'm just telling you it'll be helpful for you. It's about $15 a month, and it does give you access to the replay feature, which is here, which you guys see me using in a lot of my videos because it's really helpful. So replay pretty much means if I click this and I go back to a different part of the chart, I can literally look at as if this was happening in the market right now. And I can go back to that place to see what I would have done in that case. So let's just say I have the replay mode on now. Anything that happened after this particular point that I went to in the market is not going to be seen. So let's just say I wanted to go back into this point in the market and I wanted to literally analyze and see what I would have done at this time. I can do that. So I can look at this, and right now is no indicators or anything because I'm just explaining like what backtesting is, and then I'm gonna give a few examples of how to put everything together. So let's just say if I came into the market at this time and I was like, okay, the first thing that I noticed is there's some liquidity here and there's some wicks here. The market seems to be coming off of an uptrend, right? So I can say if I was to get into the market at this time, I would get into the market for a buy, right? Let's just say I said that. I don't know what's going to happen next based on what you're looking at or what you're trying to figure out. And I can get my long position tool. I can put it here, right? I can drag it up above the highest high. I can put my stop loss below the lowest low. And then because we are actually in replay mode, I can say, okay, what would I have done in this trade, right? If I would have bought in this trade, let's just say I click buy down here, right? Because this is what backtesting is all about, like going back into the past to figure out where you went right or wrong. So let's just say we analyze this for a buy based on the simple fact of that. We set up our thing. We in replay mode, and then you actually have the option to enter a demo trade on your account, right? You can enter a demo trade and see how it would have played out. So let's just say if I do 25,000, this is basically $2.50 per pip, and I click buy, right? It's gonna arrow is gonna pop up on my chart to say, okay, potentially if I would have gotten for this buy here and then play it out, what would have happened? Now we can already see that although this trade did hit TP, we can see that it hit stop loss first, right? So we would have been taken out of this trade, but had our stop loss been lower, we can literally see the money going up and down right here, right? And we can see what we would have made or lost by the time this trade closed if we had analyzed it correctly. So we're just going to let the replay mode just finish playing and see where things end up. And then we should get a message that says, congratulations, you won money in this trade or you lost money in this trade. So I don't know if it froze, but I don't think it's finished playing out. Yeah, it didn't finish playing out. It looked like it froze somehow. But as you guys can see, we can see exactly like what would have happened in this trade just by going back and trying to analyze it. And then we could have actually gotten to the demo trade to see what we could have made or lost had we done a particular thing or not. So as you can see, it says plus 204 right there. So that would have been the results of that trade. So that's just really one benefit of getting the paid version of TradingView because you do have the ability to backtest like that. But you can do this for trades that you win or lose as well. So let's just this is actually the perfect example. I'm happy I didn't delete this, and I'm going to show you how to pretty much backtest, practice why this trade went right or wrong. So this was a trade that we actually all, I don't know if we all took this trade, but this was a trade idea that I dropped into the chat last week. It was NZD USD. It was for a sell. And as we can see, this trade hit TP1, TP2, and TP3. Now, when I'm doing my videos for you guys, after the trade plays out, again, if you've ever watched the videos, I'm like, hey, this is another Forex video. I'm going to show you guys this trade idea I dropped, and I'm going to show you exactly what happened in the trade. So because this trade went well, I'm happy about that. I'm not just going to dismiss it and be like, okay, it went well. I still want to know what I did right to make that happen. So I'm just going to simply put the thing in replay mode again. And again, if you don't have replay mode because you decided that you don't want to pay for it, or maybe it's just not in your budget right now, you can just and this is still considered back testing because you're still looking at the past. You can just use a vertical line or other tools to go back and do the same thing. But I'm gonna do both. So I'm gonna take my vertical line. I'm gonna come to the trend line tools, get the vertical line, and I know that this is my entry candle, right? Simply because that's where my take profit and my stop loss box is. So I must have entered the trade there. But because we do have replay mode, I'm gonna put it in replay mode and I'm gonna drag it back to my entry candle. And I'm just going to pretty much analyze it again and see what was going on at this time. So the reason why I decided to take this trade for a sell was because at the time, and again, if you guys have watched my breakdown videos, you'll see this is basically what I'm doing and why I'm doing it. I want to see where I went wrong, why I went wrong, what could I have been done differently? Did I have my correct confirmations? Were my indicators aligning? So if I go back and let me just put my indicators back on my chart, I'm just going to see, did everything align how I needed it to align? And that's why the trade went in my favor, or did I get lucky? So I'm just going to say, okay, I'm just talking backwards. Like, okay, so I can see that the market was tapping into this zone a few times. And we know about supply and demand and support and resistance. Supply is an area at the top where every time the market seems to push into that area, it'll come back down. So I noticed that. I noticed that the market was already, and this is something we need to do more too, guys, because if you're only looking at such a small part of your chart, you really won't get the bigger picture. Like if I was just looking at this, right, this looks a little bit consolidated to me. It doesn't really look like the market is on too much of an overall downtrend. It just looks like it's consolidating, and I may get lucky if I take a sell. But if I zoom out, right, zooming out will really change your whole perspective on things. Like you just got to see the bigger picture. When I zoom out, I can see that this market has more of a strong selling trend, right, than a buying trend. So I know that if the market was to push back into my, let me just reset it. I know that if the market was to push back into my supply or resistance zone, then I have a higher probability of a sell happening or continuing, simply because that's the overall trend of the market. If that makes sense, y'all, drop a 7 in the chat, right? Because pretty much whenever you're trading, a way that you can remove some stress or anxiety out of your trading is to just look at the bigger picture. Like, first of all, if you feel like you're getting confused, you're getting mixed signals from the market, the best thing you could do, honestly, is just to not take that trade, right? If you're getting too many mixed signals based on the what you're seeing small, just don't take the trade, right? But if you still feel like something's just telling you you really want to take that trade, or you just don't want to not trade, just zoom out and get the bigger picture so you can say, okay, cool. This market may look consolidating, but overall it's selling. Cool. So that's what I did. I put my box right here. So because I put my box here, I also noticed that my candles were beneath both of my EMAs. EMAs are trend lines, right? And trends tell us like what's happening. So when the candles are above the trend lines, which you see here, the market tends to use the EMAs as a trampoline. So they'll come down, go back up, come down, go back up. When the candles are beneath the EMAs, it's pretty much the opposite. It's telling you prices below average, and it most likely will continue to sell. So in this case, I can see that I had my supply zone, which was pretty clear. I can see that my candles were above my EMAs. And that's why I put my stop loss directly above the EMA, because if price is going down, right, like we saw from the bigger picture, there's no reason why it should be creating new highs or going above average out of nowhere, right? So that's the first thing. Now, the rest of the confirmations, again, if we're simply using the confirmation checklist, momentum is negative. Stochastic, both numbers are below 50. The orange line is above the blue line, right? So trading really doesn't have to be stressful. It's very, very routine and it's very much clockwork. But if you're not getting into the market, you're not practicing, you're not backtesting your trades, you're not seeing what you did wrong, you're not going to make any progress, right? I actually love when I'm wrong in trades because it gives me the opportunity to figure out what to do better next time. Because if I can fix that one mistake, I can really take my trading game to the next level, which I've seen happen multiple times. So again, I set my TP I set my stop loss where I set my stop loss. I set my TP where I set my TP. And again, I just did a simple 1-to-2 risk to reward ratio, right? Again, my trading is very methodical. It's very routine. It's no smoke and mirrors. It's no tricks. It's nothing extra. I'm literally just looking at my indicators, looking at price action, and I'm going with that. Sometimes it goes in my favor, sometimes it doesn't, right? But you have to know why it went in your favor, right? So I have a 1-to-2 risk to reward ratio. That's my standard. So now we're going to get into the actual, we're going to play it out and we're going to see what happened, right? So I'm going to hit play. And we can see, right? And I'm going to pause it again. On the very next candle, right, we can see that the market literally tapped back into that zone just as we expected it to. And then it continued to drop down and hit all 3 TPs. So, and it may still be selling. Let's see. All right, so this is where we are now. So that was a really good example of back testing, pretty much just going back to a place in the market of something that happened and figuring out why it worked out. We can see that this trade worked out because we had our supply area that was valid. We had it under both EMAs, which was valid. Basically, everything was aligned. So the trade just went in our favor. Now, let's just say all of your confirmations do align. You got supply, you got demand, you got all those good things, but the trade doesn't go in your favor. Then that's when you might want to just go back and double check the news to see if it's something that you missed, right? Because as I think we did in the last class, I showed you guys how the news can really affect how the market is moving. And if you overlook that one detail, you might actually end up losing your trade. So let's go to AUD USD, and hopefully this chart is still marked up. Okay, it is perfect. And I will show you guys. This is another example of back testing and why a trade worked out or it did not work out. Let me see what this is. So this was a 1-to-4 risk to reward ratio. Some pips were secured, but it didn't quite hit profit. And we can actually just go back and we can see why, right? So I entered the trade somewhere here. So of course we want to come back. If you're using replay mode, click the replay button, go back to your entry and start to figure out why the market did or did not hit your entry point, right? So in this case, I did the same thing. As we can see, I set up my supply zone, right? So we would assume that this was a sell, right? Because this is red. So, and then we see my green box down here. So it's like, in this case, I thought that this trade was going to sell. I have the candles under my purple EMA. I have the candles under my blue EMA. I have my momentum. It's not quite facing down, but it is negative. My stochastic is facing down, and both of these numbers are below 50. So those were some things that led me to believe that I should get in for a sell. But now that I'm looking at it, and now that we go back, we can actually see how this market actually could have bought, because this could have been considered a demand zone, right? So maybe that's a mistake that I made and why the market didn't push down as far as I thought it was going to push down, because I simply ignored that the market was having a hard time getting lower than this, right? Not only was the market having, sorry, y'all. Not only was the market having a hard time getting in lower than this, but if you remember from 2 weeks ago, we can see that this candle closed here. Because remember, red candles open up here and close here, and this candle open here, meaning that not only was price having a hard time getting lower, but a potential for a reversal pretty much is it could happen, right? But I still said, based on the confirmations that I had, let me get into this trade for a sell and see how it's going to play out. This trade is actually still active, but I can see some mistakes that I made looking at it in retrospect. So this is why I encourage you guys to look at it in retrospect. I'm not always right. I don't claim to always be right, but I do like to come in here and figure out what's going on. Like, where did I go wrong in this particular trade? So we're going to put our short position tool back on here. This was my entry candle. Of course, I always do 1-to-3 risk to reward ratio. Well, 1-to-2, sorry. So that's what I did, and we're just going to play it out and see what's happening. Now, if this trade was a sell limit, right, it did tap back into the zone, but it's still having a hard time getting much lower than where it was before, right? It's still having a pretty hard time. And we can see that a new demand level is actually being created right here. So in retrospect, was selling the best thing to do, right? Or should we just have waited to make a decision? So just looking at it, I feel like I could have definitely analyzed this trade a little bit better, and I probably would have set a different type of order down here. Right. So if that makes sense, guys, just drop a 7 in the chat, right? Or you understand why it's important to go back and look at what you did, because you may think you're doing a great job. You may think everything aligns, but sometimes you just have to go back and I'll just ask you guys, have you ever looked at a trade and it really made sense in retrospect? Like, your trade has stop loss, or it just went the completely different way. Maybe you didn't have a stop loss, but now looking at it, looking back at it, you can see exactly what you did wrong, right? Just drop a 7 in the chat if that's ever happened to you, right? Because some things that affect trading are the news, right? The news affect trading. Your mental and emotional state will also affect your trading as well, right? Now, you may not see how these two things are connected, but they're actually very connected. If you've ever had a really good day and then your trades also reflected it, you was in the right state of mind, everything went in your favor, drop a 7 in the chat. And then also drop a 7 in the chat if you've ever decided, I'm going to trade because I'm upset, or I don't have nothing else to do, or let me trade to get my mind off of other stuff. And then your trades completely went the other way, which just made your mood go along with it, right? Like, everything in life is connected, right? I'm not going to get too deep, guys, but how the lens through which you're viewing stuff is going to impact how you're analyzing stuff. If you're in a position or place in your life where you feel like everything's going wrong, nothing makes sense, you don't know which way to go, what decision to make, you're going to carry that same energy into the market. But if you're at a place where you're cutting out all the noise, you're focusing on what matters, you're sticking to a routine, even if it seems hard or redundant, right? You're going to find more results in your trades. And the reason why it's important to be non-emotional in trading, right? This is something that I know everybody is still struggling with. Everybody in this chat is still struggling with emotional trading. Everybody in this chat is still struggling with being wrong. Everybody in this chat is still struggling with taking risks. Everybody in this chat is still struggling with consistent results. And it's because you're not trusting yourself. You're not trusting the path that you're on. You're not trusting the methods that you're using. And if you're doing this with your trading, I know you're doing it in other areas of your life, right? And I'm only saying this because I've literally gone through the same things. When I'm in a good mood, I trade better. When I'm in a bad mood, I'm not going to trade. If I ever try to trade in a bad mood, the market just went the other way because I'm literally not thinking clearly. I'm not seeing things clearly. It's just not making sense, right? Yeah, Gerald said, try not to trade when you're feeling negatively, because it literally never works out, right? If you're doing something unemotionally and routinely, you're going to see things more clearly. You're not going to see what you want to happen. You're just not going to do that. So I encourage you guys to get in here, backtest, and see what's really going on. And we can look at some more examples. Let's just see if I have anything else marked up, because sometimes I'll delete my drawings before every analysis, and sometimes I'll just leave them on, which will make sense. All right, so yeah, I gave you guys a positive backtesting example, then I gave you guys a negative backtesting example. Now we're just gonna do another random backtest example. And the way that I like to do this, if I just want to practice, because I'm such a I'm basically obsessed with trading. That's what I'll say. Or as Lisa would say, I'm very passionate about trading. So I'm back testing all the time so that I can learn to identify mistakes even before they happen. So I'll just randomly, like, I'll turn on replay mode. I'll just do this. I'll close my eyes and then I'll just click. Right. I'll just click a random place to say, okay, what would I have done in this case? And would that have been positive or negative for me if I would have done that? So let's just I want you guys to actually participate on this part. Hopefully you're paying attention and you're not just listening to me talk, right? Because it really helps you to be engaged at the current moment, plus going back to watch the video so you can be like, okay, I get what she was talking about. So we're going to analyze this trade together. And I just want you guys to just start dropping in the chat some things that you see or something. How would you start to approach and analyze this trade, right? I want to know if you would have put your supply on, if you would have put your demand on, if you would be looking for a buy, if you would be looking for a sell. What are your indicators telling you? Like what's really going on, right? And I just want some suggestions, and I'll tell you, I'll just walk through my entire thought process and what I would have eventually decided to do, right? So Kayla says sell, right? And just give me some reasons why you would have sold. And I'm just going to be thinking out loud because this is, again, something that we all do and mistakes that we all make. So the first thing that I would do is I would notice these wicks right here, right? I would notice these wicks right here and I would say, okay, this looks like the market has tapped into this area and it looks like it could be coming down. That's the first thing I noticed. So my mind is biased to a sell because of the wicks, right? That's the first thing we're going to notice. But as we continue to analyze the trade, and again, I'm not saying what's right and what's wrong. We're doing this in real time, right? It's in a buying trend, okay? Why are you saying it's in a buying trend? It's a few things. I'm just literally going to put everything I'm noticing about this now. I see we got some wicks here, right? And I'm going to just work my way down. I also see that there's a potential buy zone right here. So let me actually just highlight it. I see a buy zone here. Right. So I see the sell because the wicks are here, but then I see the buy because it bought here, right? It bought here, right? We had a big breakout candle there. So right now, essentially, I'm getting mixed emotions from the market, but we're going to continue our analysis. I see that the blue EMA has crossed over the purple EMA. So far, let's do our throwback. Let's do our tally mark method, right? This is throwback. So far we have a sell confirmation with the supply. We have a buy confirmation because it's also near demand zone. We have another buy confirmation because the blue has crossed over the purple. So we know that the trend should be changing. So don't get caught up. We also have the candles above the EMAs. We also have, it looks a little sketchy, right? Because of the wicks. But we also have our momentum. It looks a little sketchy, but it's still positive, right? Don't trade what you want. Trade what you see. We have the momentum is positive. We have our stochastic, right? Both our numbers are above 50, right? Although our stochastic is facing down and the orange is over the blue, right? So if this was a game, who would be winning just based on the points alone? Would the buyers or would the sellers be winning? You guys let me know. Based on the points, right? B is for buyers, S is for sellers, right? We have five buying confirmations and 3 selling confirmations. This is the perfect example of trade what you see, not what you want. So the rookie me, right? The non-professional trader thinking me, right? Because we have to transition ourselves from thinking like regular average traders to thinking like professionals. The old me would have said, I'm going to get into this sell and then this is what I'm going to do. And I really hope that y'all are just following along so that you can catch some of your own mistakes. The old me would have said, I'm going to set a sell limit here. I'm going to set my stop loss above that high. and I'm gonna set my TP there. That's what the old me would have done. Now, and I want you guys to be realistic. If that is what you would have done in this case, drop a 7 in the chat, right? That's what I would have done. I would have set a sell limit. I would have said, okay, if the market taps back into that area, I'm going to get in for a sell, and I'm going to hope that it pushes below there, right? That's what I would have did. And I know a lot of you guys would have did that too, whether you want to admit that or not. Now, the professional, okay, bye, Gerald. The professional thinking trader me would also be thinking that this is a buy as well, right? And I'm going to keep both things on the chart. I'm going to keep my sell. Remember, this is sell because the green is at the bottom. The stop loss is up here. That's going to be my sell thing. Then I'm going to put a buy one on as well. Now, my reason for buying is simply based on method and routine. It's not based on any type of sentimental analysis. It's not based on, oh, well, I feel like this is going to sell simply because it looked like it's at the top of a trend and it's going to reverse. The market doesn't care about how you feel. So just do what you see and not what you want. So I would set a buy limit, right? I would set a buy limit, and we're going to see which one works out. I'm going to put my profit level up here above the previous high, and I'm actually going to put my stop loss. Yeah, it's pretty much just going to be reverse. It's just going to be reverse. So this one to the left is my selling. If it goes outside of the red, it hits stop loss. My green one is my buying. If it goes outside of the red on this one, that means it hits stop loss. Now, the reason why I chose to buy is simply because I have more confirmations for buy than sell. So I will wait until the market tap back into my supply zone, and then I would get into the trade, right? So we're gonna see what actually happened, right? And I'll put a horizontal line where my entry point would have been for the buy. And I'll just turn that green so we're not confused. And I'll put another line so you can see where I would have got in for the sell. And then we're going to hit play. Look at that. So our sell trade would have pretty much hit stop loss. Our sell trade would have pretty much hit stop loss. And it would have hit stop loss pretty quickly, just because if we would have actually taken into account what we were looking at, we can see that the market was actually going up instead of down. Right now, that makes sense, guys, and you can see the mistakes that you would have made and what you could have done differently. Just drop a 7 in the chat, because the point is to take everything into account. It's really not to just do what you want. It's really not to half-ass it and be like, oh, well, I see some wicks, I'm gonna just get in for the sell. It can be that simple, but after you've taken everything into account, that's when you should be able to make a solid decision, right? And as we can see, again, the candles were above, right? We can see that the candles were above, so we should have just focused on buys. Right now, when we have the candles crossing below, and then we having the candles start to close below, then we can start to look for sells. And I'll just give you guys a tip, right? I feel like I'm always giving tips about candles because it's really the more you know, the better you can do. It's not that I'm a better trader than anyone. It's not that. It's just that I take more things into account because I have more experience, right? If you are a parent and you have to teach your kids how to drive, they're going to be making mistakes simply because they haven't been driving that long. Or I want you to think about yourself when you first started driving, and then the instructor who taught you how to drive. Now, that instructor probably don't do everything that they taught you in class, but they have more experience, right? You was just learning how to drive. You just teaching your children how to drive, right? So it's going to be some mistakes that's going to be made. They're not going to do everything perfectly. They're not going to do everything right every single time, but they will become a better driver over time. And it's the same thing when it comes to trading, right? You just have to take these things into account. So I'm going to give you guys a candle tip really quickly to help you with your entry points and to take away some of that doubt and anxiety when it comes to trading. And it's pretty much It's simple. If you are, let me just see, if you are, all right, let's just say we got into the market here. Let's just say we got into the market here. All right. If we were to come into the market at this time, and again, this is just another example of backtesting, and backtesting is you're going back into the past just to see what would have happened. So let's just say if we got into the market at this time, right? Now, I don't usually like to take my trades when they are between EMAs. I like until the market actually makes a decision. So that's why I say if the candles are above the EMAs, buy. If the candles are below the EMAs, sell. But sometimes you may find yourself in a situation where the candles are between the EMAs. Maybe it's your only time to trade. Maybe sometimes you just feel like you have to trade and you don't want to go to your demo for whatever reason, and you don't want to not trade. So you're going to take the risk, whatever. When the candles are between the EMAs, my advice would be to just wait for the next candle to see what the next candle does, right? Because a method that I like to use when trading is just called like the cross and the close. And what that means is if my candles are between the EMAs, it's literally saying the market is not below average, it's not above average, it's kind of just in the middle. We don't really know what's going to happen. But I do know that once the candles cross below and close, right? That's why it's called the cross and close. Once it crosses below this EMA, then I should have the confidence to know that the market is going to sell. And this is why you guys may seem like I be telling y'all random information. It's just not making sense. But I always bring up the anatomy of the candle, right? I always bring up the opening of the candle, the close of the candle, the high of the candle, and the low of the candle, because these things matter when it comes to the grand scheme of things. If my candle is opening and closing below average, the only logical thought is that the market's going to continue to sell, right? So right now, my candle open and closed in the middle are two EMAs. For me, that's not good. If I'm using the 3 candlestick strategy, which means I'm going to go 1, 2, 3 candles back just to figure out what's going on, this isn't really telling me anything. Now, if I go to the next candle, okay, cool, right? Look at that. My next candle, it didn't open below the EMA, but remember last time it opened lower than the previous candle. So now I'm working with these 3 candles. I can see my candles are below my EMAs. I can see that I have my supply zone here. I can see that my third candle opened where my last candle closed, which means price is not being debated if it wants to go higher. Now I would just wait and see. Well, depending on how patient you are, you can either enter this trade for a like market execution because the candle has already crossed below, or you can wait until this candle actually closes below this EMA so you know the trend is going to sell. So let's see what happens. Perfect. My candle, it opened above the EMA, but it closed below the EMA. That for me, I got the cross and close. That's just something I look for when I'm trading, and it worked out, right? So I was set, let's just say I set a sell stop, right? And you can set a sell stop anytime. A sell stop is pretty much if the market is dropping, your trade will be triggered as the market drops. So let's just say we set a sell stop. No, it would have to be here. Let's just say we set a sell stop here where this candle opened because it opened below there. We set our stop loss here and we set our TP below the previous low. We can go here or we can go here, right? We got the cross and close. Now let's see what happens. Look at that. TP hit just off of a simple cross and close, right? And we can see that this was like a 1 to 2 risk to reward ratio, right? It's about a 1 to 2 risk to reward ratio based on the cross and close. And again, this can be the same thing with a buying trend. And I'll just show you guys if we were confused about which way the market was going. Like, let's just say I'm just trying to go to a buy example, right? Here's a really good one. So let's just say we come into the market at this time. Before I move on, is this making sense, y'all? The cross and close, right? If the candles are in between anything, you don't want to do anything. If you're going for a buy, you want it to cross and close above both EMAs. If it's selling, you want it to cross and close below both EMAs so that you know that the highest price and the lowest price were both either above or below average. If that makes sense, drop a 7 in the chat. Okay, good. So on this buy example, let's just say we came into the market at this time, right? We have our two EMAs, and it's a lot going on, right? So this trade for me, it already looks like a buy, just off the breaking structure alone. But we're gonna do the full back testing thing. So we're gonna say, okay, what do we see going on here? Let's highlight our anytime. And this is another candle tip because I feel like once you learn this, you literally can't go wrong. It's kind of impossible. Once you see that the market hits that first stall, right? The market hit a stall. Once it hit that first stall and it's a wick, it's not going lower than that. Do not look for sales. It doesn't make any sense. Because then once you get that second candle, the market's going crazy. Same thing. The market hit a stall. It didn't go any lower than that. It went up. The market hit a stall. It didn't go any higher than that. It went lower. So anyway, market hits a stall, as we can see, is not going any lower than that. Plus, we got the break of structure, right? On this long candle, we have the cross. It crossed both EMAs. Already in my mind, I'm just waiting for the market to now close above. Oh, let me get the right box. Now I'm just waiting for the market to close above, like, right? Because the market it can be up here, but then it can come back down. That's where those wicks come from, price being debated or whatever. So let's just say I wanted to set my entry point. I'm going to do a buy stop, meaning that as price continues to rise, that's when I'm going to, my trade is going to trigger. So I will set my entry point above where the market currently is or where this candle closes. I will set my stop loss down here. I will set my TP above the previous high, right? Not only that, we have our momentum line is facing up and it's positive. Our stochastic, both numbers are above 50. Our blue line is above our orange line. So let's just see what happens, right, in this trade. Look at that. TP hit, right? TP hit based off of simple cross and close, guys. Simple cross and close. So that is the candle example that I wanted to give you guys today because it helps, right? If you feel like you have learned something so far on this session that's really going to take your trading to the next level, just drop a 7 in the chat, right? Because sometimes we're just impatient. Sometimes we are accepting half confirmations. Sometimes we are not paying attention to everything because we don't think it's important. Sometimes if we have, and this is what I was telling, well, I told a few of you guys this on your one-on-ones. If you have an indicator on your chart, it should serve a purpose. If you're going to completely disregard what that indicator is telling you, then what's the point of having it on your chart? And the example that I always give is, it's like if you have a company, right, or you work for a company, they're not going to just pay somebody to be there for no reason, right? If you have no purpose being there, you're not going to get paid. Like you're adding no value. So why is it even there? If you're not going to check in with your indicators to confirm what you're seeing, if you're not going to read the news, literally, what's the point of trading? Right? What's the point of knowing you can make easily if you're just going to do everything wrong and do what you want anyway? Right? What's the point of having a mentor if you're not going to watch the videos or take the advice? What's the point of paying a quarterly or a annual or a daily, or what's the point? Right? If we're not going to actually use the information that's right in front of us. And I say this all the time. This is juvenile. Right? Now it's important because we're adults and we're getting money and it's financial markets and that. No, let's just really talk about what it is. These are red rectangles and green rectangles. This is a purple line and this is a blue line. We are using Wi-Fi. We're using squigglies. Like we're literally using, like, a kid can draw this, y'all. And we are adults, right? We have logic, right? We can think, we can make decisions. So if we know that all we have to do is follow a method and a strategy, right, to get results, why are we not doing that? Right? Where is the anxiety coming from? Why are we scared to be wrong when it's just we're doing the same thing every time? If you're wrong, you're wrong. If you're right, you're right. When I lose a trade, I just be like, okay, let me go see why. Oh, okay, I wasn't patient. Okay, I didn't wait for the cross and close, because there's times where, and this happened recently in a trade where I think it was a Euro GBP trade that I dropped in the chat maybe last month, and I had every confirmation that I needed except for the candle didn't close below the 200 EMA. And had it closed, then the market would have continued to sell, but the market actually hit that cap and it turned around and the trade ended up in a stop loss because I was not patient. I was getting ahead of myself. I was being an arrogant trader. I can admit that, and I was wrong. So you just got to sometimes slow down, back it up. And again, the last thing I'll tell y'all, and I just really hope that this makes it just so clear, like before I actually show you guys how to post on TradingView, like I just really want y'all to just look at the market, right? If you're not driving and if you have the ability to look at the market right now, just look, right? And I want you guys to notice only one thing. Whenever the market starts to stall, right? And when I say stall, I literally mean stall, right? We can see that the market is stalled out on this candle. It's going to be a reversal. Like, some of you guys just can't get, like I always say, if you're a new trader, trade with the trend. It's easier. But some of y'all just can't get reversals out of your mind. You just want to do everything. So I'm going to show you the proper way to do that. Just please look at what happens when the market starts to stall out. If you see a very long wick at the top or the bottom, or a flat top at the top or the bottom, just let me know, right? If the market tends to reverse every single time, right? Just drop a 7 in the chat if you can see when there is a stall, the market. And let me just put this on the 15-minute chart for my impatient traders, right? The people who just want to scalp and they just can't take 4 hours. Look at the stalls and then look at the price action, right? If you see it stalling at the bottom and then you see the market buying, drop a 7 in the chat. Right? I just want you guys to look for buy examples right now. If you see it stalling and then buying, drop a 7 in the chat, right? If you see it wicking at the bottom, which is also stalling, and then buying, right? Drop a 7 in the chat. And it's the same thing with sells. And I'll switch it to another pair because it's not exclusive to Euro USD. Right now, I want you guys to look at the wicks at the top. Right? It can be here. This is a great example. Look at the wicks at the top. Look at what happens when the market starts to stall. Is there or is there not always a reversal? Just, y'all let me know. Right? If you see the stall and then the reversal, for the sell now this time, drop a 7 in the chat. Yes, reversals after stalls, exactly. Right? So I really want you guys to start practicing. I want you guys to start putting into account like everything that we've gone over for weeks. Like, this is like week 32 of the class. We've been doing this since February. This year alone, I've dropped over 100 videos, right? So there's no excuse for anybody to not be practicing. I could see if we didn't have access to demo accounts. I could see if we didn't have a mentor. I could see if we didn't have beginner videos pinned in the chat. We didn't have playlists organized by category. I could see if we didn't have access to a cha-cha and we was just out here lost in the wilderness, right? Like Moses. I could see it. But we have mad resources. So my expectation is that y'all will really get into these markets and start practicing. Like, I want to see more engagement in the chat. I want to see more withdrawal screenshots. I want to see more trade ideas being shared. I want to see more people posting trade breakdowns. I want to see more people asking questions. I want to see more people being correct in their trades, because it's too much information, too much resources, and too many results. Like, Spicy is still a student, y'all. And just because she's getting results, it's because she practices. It's not like me and Spicy are over here having secret conversations. She don't book no one-on-ones. You know what she does? She watches my videos. She comes to my classes. She can be my best friend, but she's invested in her own education. I can't get results for her. I can't pay her bills. Like, I can't support her business. Like, that's something that she has to do 100% because that's what she wants to do. Right? So I just want everybody to really just start applying yourselves and stop acting like you can't do it. Stop acting like it's so hard. Stop acting like I'm speaking Spanish or French or Japanese because I'm really not. Right? So yeah, me and Spicy do not trade together. Like, we don't even share trade ideas. Like, I take Bitcoin trade ideas sometimes, but not all the times because that's not my thing. And she don't take every idea I post in the chat. So it's really every man for themselves out here. So I feel like I provide enough where everyone should be on the path to becoming independent and profitable traders. I don't want to sound like anybody's parent or that I'm scolding y'all, but I need to see more, right? Because it's very simple. If you're wrong, you're wrong. So what? Use your demo account. And if you blow your live account, and I used to say this all the time, especially with HFX, I ain't tell you to do that. That was not my instruction, right? So I really hope that this portion of the class was helpful, and that you guys really learned something, and that you really start taking into account everything that you've been learning, because once you start to backtest on your own time and you really start to apply yourself, you'll see how much you really know, right? And then you'll see how many mistakes that you've been making because you just weren't really following the system, or you weren't really following your system. But you can correct that, and it can happen in a few days. It can happen in a few weeks. It's just going to be up to you. So I'm actually going to stop this recording, and then I'm going to just do a brief review of how you guys can post on Tradingview, because that is a part of the challenge this week. So yeah, until next time.